Hey everybody, Dave Hathaway. It is another deal day where each week we look at a new property in a new market to determine if it makes sense as an investment property. This helps us build repetition, discover new markets, and become better investors. So this week we're actually going to look at Columbus, Georgia. So Columbus, Georgia as a market is 6 hours from Orlando and New Orleans, and it's about 1.5 hours from Atlanta. It is home of Fort Moore, formerly known as Fort Benning. So it has a heavy military population, has a huge military base. And I do want to say thank you to all those that serve in the U.S. and those families that support those service members. The address that we're going to look at today is 4718 18th Avenue, Columbus, Georgia, 31904. But before we look at the specific property, and this one's a cool one, I'm going to show you how to turn a unique property into an ATM. Let's look at the overall market. Columbus, Georgia. So in Columbus, they have a population of 200,957. It's declined negative 0.65% over the last year. That's not a huge amount, but it is something that you should consider and keep an eye on. It looks like it's just dipped in the last year, so nothing big. But if the military base were to close down, that would be a huge blow to Columbus. I wouldn't assume that would happen because this is a huge training ground. Job growth for Columbus is 2.3%, which is great. Unemployment's 4.5%, a little bit higher than the national average. The average salary is $52,000 per year, which is good. Median sales price of properties are $219,000. It has, however, increased 13.7% year over year. So this is a competitive market, the Columbus, Georgia market. So it was hard finding a property. Let's go check out the Google Street View, which is our next test when looking at properties to determine which property I analyze each week. Just so you guys know, I often look at Google Maps and I look to see where the Starbucks are, where the Whole Foods are, where the Costco's are, where chic coffee shops are. And then I'll determine which, areas might appreciate better or might be a good area to invest in. And that's how I selected this property. When you look at the Google Street View test, nothing sticks out. This is a normal single family neighborhood. The only thing that even comes to mind is this property is on a hill on one side of the street and the other properties across the street are below the street. So that's a good thing. You're not going to have water runoff. Any water when it rains that comes off the roof of this house is going to go across the street and right down to the other houses. I wouldn't be surprised if they had trouble with water in like the basements or the lower areas. So it's a good thing. So it passes the Google Street View test. Moving on to the listing, this property is listed at $185,000. It's a 4-bedroom, 2-bathroom, single family property. But here's the unique part. It has a 1-bedroom, 1-bathroom ADU in the rear. Basically a second house in the rear. I don't normally say invest in unique properties because they're just more challenging. If you have to pay more for the unique property or pay less, you're usually going to have to sell it for less. But this one is kind of cool and I'm going to show you how to make it work. So stick with me until the end. It has 1,800 square feet in this property. It was built in 1970, so not that old. My rehab suggestions are going to be take out those ridiculously ugly white banisters in the kitchen, install LVP in the home, install LVP in the ADU, build out a small kitchenette in that ADU in the rear because it doesn't have any, install some nice large frame mirrors in the bathroom, upgrade the vanity to a nice one in the master bath. And the last thing in that ADU, I'd take that huge living room and turn it into another bedroom. There doesn't need to be a ginormous living room in this ADU. So my rehab suggestion is $15,000 or $9 per square foot. I think you could sneak it out. When you go over to the analyzer, and if you look at Rentometer, it shows this property will rent out for somewhere around $1,580. And unfortunately, that ain't going to make the numbers work. So this is where I bring in this unique strategy. There is a company called Pad Split. And in essence, what this is doing is you're going to rent out each room to an individual. You can rent it out weekly, monthly, yearly, but they pay weekly. And I've seen other investors do this strategy and it has worked out very well for them. I think this market is a good market where you can rent out bedrooms, especially with a huge military population renovation. They often don't want to purchase a house and deal with the house. They just want a room that they can go through their training. Sometimes it's 1 year, sometimes it's up to 3 years. So if they can save money and have cheap rent, somewhere around, $600 a month, then they're saving money in the long run, and you can, provide that opportunity for them. So if you do the numbers on this one, and I have the listing and it shows pad splits, it's available in Columbus, Georgia at $160 a week times 6. If you made that extra bedroom there in the ADU, that's going to come out to $960 a week or $3,840 a month. So you'd have to cover utilities and you'd have some expenses like Wi-Fi each month, but that is still going to give you a ridiculously higher rent than the $1,580 that Rentometer comes from. It's a little bit harder to rent a single family property and then rent another property in the rear of this property. So I use super conservative estimates if you're doing the pad split strategy at $2,100 a month, which is super, super conservative. And comps in the area come out to, somewhere around 200,000. Property taxes are 727, super low. But if you're looking at the analyzer itself and you're getting that $2,100 a month in rent, I think you get much higher. The calculation out with it fully rented at $3,840 a month is amazing. But this would give you a monthly cash on cash return of $1,591 or 9.3%. If you have it leveraged, you'd be making $390 a month or 9.15%. It's okay. I wouldn't purchase the investment like that. But with the pad split number, if I adjusted to conservative $2,500 a month that I'm making, those numbers turn into an 11% cash on cash return and a 16% cash on cash return. I wouldn't expect appreciation in this market. I mean, the central markets in the US, they don't appreciate like crazy, but they have appreciated a little bit over time. So I know this is a unique and a creative strategy, but if you can be, super creative and you get $3,500 a month or $3,200 a month, this one's going to be a cash machine. It's going to do great. Hopefully that makes sense. For the Columbus, Georgia market, I'm going to give it a thumbs up for this property. If you're creative, if you live locally, I'm going to give it a thumbs up. I'm going to say, go all in, have fun. You're going to make money. If you don't live locally, I'm going to say thumbs down. Don't do this strategy. But I thought it'd be a cool way to introduce you guys to pad split. Just thinking creatively on how you can make money, renting out things a little bit differently. Instead of to one person as a long-term rental, you're renting out rooms to individuals. Hopefully that helps. Guys, if you like this video, I'd love if you'd smash the subscribe button, give the video a thumbs up. We really appreciate everyone that's done this. Thank you for helping out the community, for helping grow the channel, and for helping other investors learn how to invest in real estate. So I'll see you guys on another deal day. See ya.